The stock market sell-off is ending and a new monster rally is brewing that is about to shock bears, trap them, and then crush them. Welcome back, you legends. I'm Dr. Cal. Let's get right into this key market update video 90 minutes before the CPI report. I'm recording this at 7 a.m. Eastern time, so let's get right into it. This is the daily chart for the S&P 500, and I want to direct your attention to three key findings on this chart. The first is this. Look at this beautiful uptrending channel. This is the S&P 500 daily chart on a logarithmic scale, and this channel has perfectly connected stock market tops and key stock market bottoms like the November bottom in late 2023. So what's going on now? Below is the stochastic with my set of proprietary settings, and every single time we cross all the way down to extreme oversold conditions and then produce a bullish crossover, every single time we've had a bottom, whether that's a near-term bottom or a longer-term bottom. In addition to that, if I connect the highs in every single correction, right, if we connect the highs, as soon as we break above the resistance line above the highs, we get a monster rally. We're now in the very late stages of this correction. We're now in the bottoming process of this correction, and we're about to break out for a multitude of reasons that I'm going to go through in this stock market update video. The market is extremely oversold. The S&P 500 has now lost just about 10% from the recent highs all the way to the lows of yesterday. In addition to that, the market has now retraced all the way back to this key trend line that has held for over 2 years. On top of that, we have the stochastic now just on the cusp of a new bullish crossover. And just as I showed you in this prior chart, every single time we had a bullish cross in oversold conditions, we had a massive rally. Now, on top of that, I want to direct your attention to this beautiful moving average. Look at how the market has consistently reacted to this moving average, sagged it here, briefly undercut it, then we had a big counter rally. Once we broke through it here, we had that massive 2020 crash. Then once we broke through it again to the upside, double tested it twice, right? We had this back test twice, twice, held both times, and the market continued to rally. So this is a trend setting kind of moving average. Again, throughout this bear market of 2022, we were trading below it. As soon as we broke through it right here, we had this double top that confirmed the bear market, and then we went on to see significant losses, about 40% for most tech stocks. Some semiconductor darlings like Nvidia lost 70% of their value throughout that bear market. And look at this, once we recovered the same moving average, that was it. That called the end of the bear market. We had a bit of a pullback, higher low, and we went on to start a new bull market. So what's happening now? Look at this, tested this moving average back toward the end of 2023, toward this 3-month correction, and it held and we rallied. And if I take a look at this, it looks almost identical, right? Almost identical to the 2023 correction. We're now just a couple of dollars below this moving average, or just a few dollars away from this trend line. And all of the momentum indicators are indicating that the market is bottoming. Let's check out some of those indicators, but before that, let me show you this gorgeous chart. This is the Trueflation indicator, and it's a leading indicator of inflation. That means whenever true inflation moves down, the inflation report that we see the next month also moves down. Whenever it moves up, we see inflation moving up. Trueflation has now made a new low since that 2022 bear market. And if I take a look at the CPI expectations for today, this morning, core CPI year over year at 3.3 was the previous month. Expected this month is 3.2%, so 0.1% lower. The headline inflation number year over year, 3% last month, 2.9% is the expected reading this month. That means the market is expecting 0.1% below last month on headline and core inflation. And if this chart is anything to go by, we can clearly tell why the market is rallying in the pre-market session, because it sees the market bottom coming, CPI acting as a bullish catalyst throughout this dumpster fire of a sell-off that was led mostly by tariff wars, reigniting inflation fears and economic slowdown. Now, again, this is the daily chart for the S&P 500. This is what I use on a daily basis. This has a lot more annotations on it, key levels, etc. We're now at the bottom of this channel. The RSI is now at the most oversold reading since that October 2023 bottom. Look at this reading, 28.33. We haven't seen anything like this reading since that October 2023 low. Two key levels for the S&P and the NASDAQ. Let's discuss those levels right now. So this is the S&P 500. Very clearly on the chart, we can see a pattern, right? We had breakdown, rally, rejected once, twice, three times, four times. This tells me this is a major pivot level, acted as support multiple times in the past. Now it is acting as resistance. This level is at, for the S&P 500, just under 6,000. On the SPY ETF, that level is just about 597.9. If I take a look at the NASDAQ 100, that key level that I'm watching, you can see it, right? Support. Once we broke through it, it acted as resistance multiple times, and then we broke down. This level is right around 513. We probably rallied just a little bit higher to about 518 for the NASDAQ. That's a significant rally, likely happening over the course of 2 weeks. That is starting today and into the end of next week. So what's going to happen today? Very likely CPI will be decent. We have two possibilities. Either we gap up, right, and then we sell off back very close to the closing price of yesterday, and then we recover from that level. That means we get a sell-off and then recovery. Another possibility is we actually dump first. That means we sell off first and open very close to the price of yesterday, and then we simply rally from that point on. So two distinct possibilities. We either see a small pullback and then we continue to rally, or we simply rally straight away all the way to the end of the week. Very likely the market has already found a bottom right here for the NASDAQ. Look at how it's bunching up, forming a doji candle yesterday on very large volume. Look at these volume spikes as the market has been finding its final bottom. I am absolutely planning to trade this to the upside. I've already begun opening more long positions as of Monday. I'll be opening more today and potentially tomorrow, depending on how vicious this rally is. If it just keeps ripping and ripping, I will not add. I'll keep my positions and just take profit at that key level. There are a bunch of really attractive setups that I'm watching that I'll very likely add to right now. By the way, if you're interested in following all of my stock market analysis, all of my trades in real time, all of the trade setups that I'm watching, you can do so by joining the trading community. You can check it out on Patreon. I do have a 45% discount right now on Patreon. All you need to do is use the 45 Legend discount code when you sign up on Patreon. That'll get you 45% off the annual membership. And if you watch this video all the way until the end, I promise you it'll be worthwhile. I'm going to be dropping a gift. In addition to this, I want to show you a shocking chart. Again, this is a daily chart for the S&P 500 up top. Down below is my own proprietary indicator that looks at back month versus front month volatility. And as of the close of Monday, we had the lowest reading since the 2020 crash. Look at this, absolutely worst reading since the 2020 crash, indicating massive panic. But then we had this V-shaped recovery. If I zoom in here, very strong V-shaped recovery, indicating that the market is now discounting next month's volatility relative to this month. And this has always meant that the market is bottoming, because what it basically means is that all of the hedging activity, put buying, is now coming down, right? Big money is dumping put positions. They're unloading their hedges, and now they're beginning to buy calls. And that's why you see front month volatility versus back month volatility getting absolutely crushed and then recovering. Now, let me show you what's happening with the VIX chart, which is the volatility chart. This is the VIX chart up top, and this is the S&P 500 down below. I shared this exact same chart with the trading community last Monday, and I want to direct your attention to a very simple market dynamic. This is the 30 reading on the VIX. After touching the 30 reading, we've never had it stay above 25, which is about here, for more than a couple of weeks. This was the March 2023 correction that was led by the Silicon Valley Bank collapse and the regional banking crisis. So this was an absolute crisis. And the worst we had the VIX at that time was about 30. Pretty much the same thing happened back here in August, the August correction. About 30 very briefly broke above it. When that Japanese yen carry trade blew up, we had a very brief one-day spike of 30, and that called pretty much the top in volatility and the bottom of the S&P. Now volatility and the S&P are inversely correlated. When volatility is rising, the S&P 500 is selling off, correcting, etc. This is a very basic correlation because usually the market will rise in a steady pace, and then when it drops in somewhat of a panic, and that leads to volatility rising rapidly, very quickly to extreme levels. Now we had that extreme reading of front month versus back month volatility hitting levels that we haven't seen since the 2020 crash. Then the market simply had a very vicious V-shaped recovery, trapping and crushing all of those late bears, all of those late short positions. So we have the VIX clearly signaling that there's a top in the VIX coming on the weekly chart, very clear signal. If I zoom in and I show you the 1 hour chart, even the 1 hour chart is now beginning to show clear reversal on the VIX. This is the VIX, and I want to show you this. Look at this. Very clear double top in the VIX on the 1 hour chart, significantly lower high on the RSI. That's a classic bearish divergence for the VIX, negative divergence indicating that the VIX is topping. And when the VIX tops, it always correlates with the stock market bottom. So that's the VIX. That is the daily chart, the 1 hour chart, back month versus front month volatility, as well as the RSI and the stochastic. Add on top of that this beautiful channel and the fact that we have inflation, true inflation, indicating that the inflation read today is going to be very likely tamer than expected. So what are we looking at here? Very simply, we're looking at a bottom forming at the edge of this trend line. We touched it yesterday, formed this indecision candle. As always, indecision candles at support indicate a bottoming process. If I take a look at the NASDAQ showing even better performance relative to the S&P 500. And this has always happened toward the end of a correction. You see the NASDAQ beginning to outperform the S&P 500 led by tech. This has always carried the market out of major corrections. You begin to see the NASDAQ outperforming. I'll show you a very clear example. This is the NASDAQ. Let me add the S&P 500 on this chart so you guys can see exactly what I'm talking about. Look at the NASDAQ relative to the S&P 500. Here is the sell-off in the NASDAQ. That was a final low put by the NASDAQ. The next day, the NASDAQ made a higher low. The S&P made a lower low. The day next, the NASDAQ began to make a higher high relative to this high, and the S&P is still lagging. As you can clearly see, the NASDAQ tech was leading the market out of this bottom. And if I, again, look at the bottom that's forming right now, you can clearly see the same kind of pattern. Look at how the NASDAQ closed. It did not go on to make a significantly lower low, just a slightly lower low versus the S&P, significantly lower, weaker looking candle. This means the NASDAQ is now leading the market higher. So what happens next? If I take a look at the weekly charts, I talked about this last week. Going back nearly 5 years now, we very rarely had more than 3 consecutive red candles. As of the close of last week, we had 3 consecutive red candles. We're now in the 4th. That means very likely a 90% plus odds this week that we close back above the closing price of last week. That means a rally from where we are today or where we closed at the end of yesterday, about 3% to the upside to close very close to this closing price of last week. This means this candle's very likely going to look like a huge hammer candle that is bullish. That means we're very likely going to see another follow through week, another rally next week. So this week, expect the candle to look like this. A hammer candle with a rally following next week. I wanted to make this video very brief. I'll come back with another update to summarize this. The market is bottoming for fundamental and technical reasons. Technically, we haven't seen the market oversold at this level, going back all the way to the October bottom of 2023 and even the 2020 crash. Technically as well, we have a confluence of indicators, that is the VIX, front month versus back month volatility. We have the RSI, the stochastic, this trend line, and the moving average that I shared in this image. all indicating that the market is in fact bottoming. And as a thank you for watching all the way to the end, I want to share the secret discount link that you'll find in the description below the video. That'll give you an additional discount above what you'll get from Patreon, 50% off the annual membership, making it $27.50 per month. And unlike Patreon, if you sign up with the secret discount link, this will be a recurring discount. That means if you decide to renew next year, you'll renew at the exact same 50% discount. You'll keep it. With Patreon, you're only getting that 45% discount for the first year that you sign up, and that's it. I wanted to drop this as a thank you for all of you legends that watch these videos until the end. I appreciate your support. Love you all, and I'll catch you in the next video. Bye-bye.
Oh, wow.